When it rains, it pours. Yesterday, 3M spun off its healthcare business as Solventum, something I talked about last night. And today, General Electric spun off its power business as GE Vernova. This GE breakup was a long time coming in, roughly 2 decades of underperformance. Oh, my God, then Larry Culp comes in, all right, as CEO in 2018. And after stabilizing the business and navigating the early portion of the COVID-19 pandemic, he introduced his vision for how to turn things around. That was in late 2021. He wanted to split the business into 3 separate companies, one for healthcare, one for power, and one for aerospace. He wanted all investment-grade properties. GE Healthcare got spun off at the beginning of last year. You know I like it so much. We bought it for the Travel Trust. Rallied from $54 at the time of the spinoff to $88 today. I have been telling club members that it can go to $100. I like that stock. Meanwhile, GE itself has shot up 150% over the same period. Like I keep telling you, Wall Street loves breakups. Culp's plan to unlock value has already been a tremendous success. But now we need to assess what GE Vernova and the remaining GE Aerospace are worth on their own now that they've split. First, let's talk Vernova. This is a colossus in the energy industry. It makes natural gas turbines. That's right, they call them turbines, not turbines, along with equipment for nuclear, hydroelectric, and steam power. This is the core business, and it throws off a ton of cash. At the same time, Vernova's got some very big exposure to wind turbines and electrical infrastructure. Whenever you hear about efforts to modernize the power grid, know that these guys are getting a piece of that. And there's a lot of money here. Because Biden's various stimulus packages, especially the bipartisan infrastructure bill, have poured tens of billions of dollars into grid modernization that is so needed. At the same time, the rise of artificial intelligence has created this unheard of demand for electricity because the data centers that power these platforms consume tremendous amounts of power. Electricity demand is now growing at a 5% annual clip, which is huge for GE Vernova. And by the way, the grid hadn't grown at all for like the last 20 years. Putting it all together, the core power business is the workhorse division, contributing the vast majority of the company's earnings, and right now throwing off tons of cash, even as it still manages to grow at a mid-single-digit clip. The electrification division is the growth engine, as it's growing at a double-digit clip. And while wind is the obvious laggard for the whole enterprise, I think you could be wrong to give up on it. The onshore wind business has already started to turn a lot of cash there. I bet the offshore wind unit can follow suit, which would allow Vernova's overall wind division to turn a profit next year, but offshore is very hard, okay? As I say, wind power still has a lot of room to run. By the way, it can have it's the greatest renewable source, so we know they're going to put a lot of money in it, and I think that many green energy plays involve wind. Looking forward, GE Vernova's offered some pretty impressive forecasts, both for this year and next year and longer term. This year, the company expects 2 to 5% revenue growth, substantial margin expansion. Vernova sees its earnings before interest, taxes, depreciation, amortization margin growing from under 2% last year to the high end of the mid-single digits. That's incredible. If you assume that means 6%, and given the revenue guidance, that implies the EBITDA could grow by roughly 200% year over year. And EBITDA is the right metric when you're dealing with this kind of capital-intensive business. Management also sees its free cash flow going from around $100 million last year to somewhere between $700 million and $1.1 billion this year. And those numbers should get even better in 2025. GE Vernova is very confident in the future, in part because they've got a massive backlog, $116 billion spread between $40 billion in equipment and $75 billion in services orders. Those are remarkable. If the company can hit its longer-term forecast, this stock will be a fantastic buy. But beyond the numbers, I like GE Vernova because the company's set up perfectly for the energy transition. That's expected to take place over the next 2 decades. Their biggest business for now is selling natural gas turbines for power plants. Natural gas is already much cleaner than coal and should be the bridge fuel that takes us from fossil fuels to alternatives. It's the decarbonization strategy that a lot of companies have. But even within the power segment, GE has other businesses. They've got nuclear, they're trying, hydro, and steam that represent clean energy. Regular viewers know I love nuclear, and nothing's cleaner than hydroelectric power. Over time, these businesses, along with wind, will gradually supplant natural gas turbines in importance. Meanwhile, GE Vernova's electrification business is perfect for this moment, when the world desperately needs to build out more infrastructure to keep those data centers running. It doesn't hurt that this company has a pristine balance sheet. I don't know how they did that, but Larry did it. And that stock's joining the S&P 500 out of the gate, which should help alleviate some of the early selling you typically see in some spin-off situations. One of the reasons why I think the stock did so well today. Finally, I am impressed with CEO Scott Strazik, who's made a great case for this company on Wall Street. He was once walking the street this morning. He was sensational. I love the board of directors. The chairman, Steve Angel, is also the chairman and former CEO of Linde. That's a Cramer-Fave industrial gas powerhouse. They've also got Nick Akins. Remember him? He's the former CEO of American Electric Power. And then Arnold Donald, the former CEO of Carnival Cruise. That's how I feel about GE Vernova, the company. What about the stock? I think it's still worth owning, especially since after spending most of the day in positive territory, it tumbled into the close and ended the day down 1.4%. This is very intriguing. There had to have been some sort of program that dumped the stock. While spinoffs often have a lot of volatility in their first few months, I recommend gradually building position in this one if you had a chance to buy it on weakness. Solventum, we said the same thing, and that stock got hammered. How about the remainder of GE, which has changed its name to GE Aerospace? Now it's basically a pure play on aircraft. Look, the aerospace division was the crown jewel of the old GE, even when the overall business was in dire straits. GE has a dominant position in engines for both narrow-body and wide-body aircraft, which are the top choices for country travel and international flights, respectively. They do have a fantastic service division with great cash flow. The only concern here is the company's exposure to Boeing, which seems to have forgotten how to consistently make safe planes. But even if Boeing's new plane deliveries get delayed, that boosts demand for aftermarket parts from GE, great business. At the end of the day, the world is desperate for commercial aircraft, and GE makes the best engines. Really, the only serious worry with GE Aerospace, and GE Vernova for that matter, is that GE has already been such an amazing performer over the past 15 months. Some of the upside from this breakup might have already been captured in GE's monster rally. Again, stocks tend to be volatile after breakup, so there's no need to buy either GE Vernova or GE Aerospace immediately if you don't own them already. Let's wait and see. But the bottom line, both the new GE Aerospace and GE Vernova are worth owning going forward, as long as you're disciplined about building a position. I want you to take your time, don't buy all at once, and wait for a pullback before you truly pounce on what I think will be two terrific long-term winners. Ultimately, I'm giving you my okay to do some buying. Mad Money is back after the break.
Coming up, hit us with your best shot. An electrified fast fire lightning round is next.